Hi everyone, welcome to FOREX Trading Empire live top-down analysis. So I've been doing this top-down analysis to keep you guys updated on where I'm anticipating price to trade to for the week. I tell you guys what is my thought process going in every week. And so far, the thought analysis have been going where I've been explaining to you guys on how you can trade using the same trading logic in the way I do look at price and how you can anticipate your weekly bias, how you can anticipate your daily bias, when to look at lower time frame and when to focus on the higher time frame, what are the specific things for you to look for before actually looking for a trade, and how you can easily build a trade plan. And I've been explaining this at the same time making a pre-recorded video on the YouTube channel, try to speak on specific topic on how you can use what is taught on the YouTube channel to build your own personal trade plan. So this is another week making the live top-down analysis. So this week on the dollar index, I've been paying attention to the daily fair value gap. On the trade review live top-down analysis, I talked about this daily fair value gap on the dollar index. I told you guys that going in this week, I will be anticipating lower prices for price to respect the daily fair value gap to trade lower to run the sell side liquidity. And if price were to keep on that trend, mostly from the 1 hour time frame, then I want to see a complete run on the sell side liquidity, which means on the dollar index, I'm currently anticipating lower prices. On the 1 hour time frame, price open, traded lower, took out the swing low, created a breakage candle. Here's the breakage candle from the swing low to the swing high. Here's the breakage candle. After a trade below the breakers candle, I marked out the breakers candle as an area where I'll be looking for price to resist from to trade lower to run the sell side liquidity. Currently priced at the new week opening gap. I'm still looking at the new week opening gap as a resistance area for price to use to trade lower to run the sell side liquidity. So you can see this is an entry drive, which I use the GBP USD as an entry. I use that currency as an entry because it's fully aligned with the idea for price to trade lower to run the sell side liquidity. So on the 1 hour time frame, I'm anticipating lower prices just as I explained from the daily time frame, so the same bias for price to run the sell side liquidity. And currently the 1 hour trend is aligned with the idea. On Friday, price traded through Monday's high into the daily fair value gap, closed Monday's traded lower, took out the swing low, took out the swing low, did a shift in structure, retracement to a point of interest, new week opening gap, breakers candle, anticipating lower prices for price to respect the point of interest to trade lower to run the sell side liquidity. On the daily time frame of Euro USD, still the same bias. After price failed to run the swing low, forming an SMT compared with the dollar, creating the swing low, retracement to the daily fair value gap, anticipating higher prices for price to respect the daily fair value gap to run the buy side liquidity. And if the trend were to keep on trading higher, we look for price to run the buy side liquidity, which is our overall draw on liquidity. If the dollar were to keep on trading higher, I think these buyers would trade more better if the dollar were to trade lower because they are well correlated. So if we were to see the dollar to trade lower, this would be a good buy for you to take a buy to anticipate higher prices for price to run the overall buy side liquidity. But going in this week, my attention is mostly going to be how price will be trading higher. I'll be paying attention to significant points of interest that price will use to trade higher, mostly on the dollar index. Then I will try to apply that same bias on Euro USD. Because from the opening price this week, Price traded higher, traded above the breakage candle, retracement to the breakage candle. Price traded through the breakage candle opening price, but the breakage candle is still valid because if we're to measure the breakage candle from the body of the candles, price haven't traded to the mid range, and there's a new week opening gap above the mid range, so it's still valid to look at it as a retracement for price to look for support before actually trading higher to run the buy side liquidity. I'm still sticking with the bias of anticipating higher prices. I get stopped out from my initial trade on GBP USD, but I'll still be anticipating higher prices as long as price is still in this price range and the 1 hour time frame is still aligned with the idea of dollar trading lower. On the daily time frame for GBP USD, GBP USD last week price took out this buy side liquidity before the retracement to the daily fair value gap. And on Monday, price respected the daily fair value gap, did a shift in structure. That led to the buy, which I took, which was already close to my stop loss. Once I get to the 1 hour time frame, I will explain more on it. But the bias is still the same. I want to see price respect the daily fair value gap. I want to see higher prices for price to trade higher. I want to see it run on the swing high and it trade through the daily fair value gap. So going this week, I'm really betting it all on price trading higher for price to run the buy side liquidity on Euro USD and GBP USD. I just need the week to be a trending week. I think when it comes to trending week, there's a high impact news this week. I think we have high impact news that might lead to higher prices or price to trade aggressively. So if price were to trade higher, I want to see those big push during those high impact news to trade through the daily fair value gap and overall the buy side liquidity. In the 1 hour time frame, after the opening price traded higher, traded above the swing high, retracement to the new week opening gap. That was my entry. Stop was at below, just little bit below the new week opening gap. My buyers, I'm anticipating price to use the new week opening gap as a support to trade higher to run the buy side liquidity, which currently is not going as planned. Because if price were to respect this new week opening gap, we're supposed to be from the mid range or from last week closing price. That should be the most significant area for price to use. But I'm still holding up to the trade, to the idea that price will use it as a support to trade higher to run the buy side liquidity. But the idea is still the same for Euro USD, GBP USD, and the dollar index. I want to see lower prices on the dollar index, and I want to see higher prices on Euro USD and GBP USD. If price were to run this swing low, I would just wait for a 1 hour shift in structure for price to trade higher. And what will make it more better is to see price still trade above the new week opening gap to use it as a support to run the buy side liquidity. So the bias is still the same. It's just the lower time frame entry. Sometimes you might take a loss because of the lower time frame entry because the lower time frame is not ready to trade higher. It's not fully aligned with the bias at that time. You only got in a little bit early and you might get stopped out before the initial trade. You just need to look back to your bias. If your bias is still aligned with the idea, then you can take a re-entry when price presents itself. On the daily time frame of USD JPY, still anticipating lower prices. Now on USD JPY, you need to pay attention to point of interest above the new week opening. Point of interest above the new week opening gap will be areas that I'll be paying attention to see price use as a resistance area to trade lower. To me, there's an internal shift on the 4 hour time frame that I'm betting on price to trade through, and yeah, I want to see a run on the sell side liquidity. But the first draw on liquidity should be the sell side liquidity. This should be the first draw on liquidity. So I want to see price respect to 1 hour point of interest, like the inversion fair value gap. If price were to retrace to it, I will be anticipating lower prices, new week opening gap. The same time, daily order block, 1 hour shift of structure, I will be anticipating lower prices for price to run the sell side liquidity. But at the same time, I might be wrong and price might trade through, because if we to go to the 4 hour time frame, I think there's a trend line liquidity here. There's a trend line liquidity, and we might see a sweep on that liquidity, and we might see a shift in structure traded higher. But you can't be right all the time. I'm just using what I believe the price will be doing based off my own technical factors and the points of interest I do focus on. Because price already traded below the mid range of the other block, that's the reason of me sticking with the idea of price trading lower. I want to see that lower prices for price to trade lower. At the same time, pay attention to the new week opening gap from the closing price to the opening price. If price were to trade below, retrace to the new week opening gap, price might use it as a resistance area to run the sell side liquidity. And if price were to do that, there's a lot of chances for you to look for those intraday setup for price to trade lower. We just need to see price shift structure on the 1 hour or the 4 hour. But mostly pay attention to the 1 hour. There's going to be a shift in structure. The 1 hour time frame will give you the clear shift in structure even before the 4 hour compared to the daily. So I'm anticipating lower prices, a trade through the swing low, and a complete run to run the sell side liquidity. So I think this week bias is pretty clear to the idea that currency that are correlated with the dollar index trading to the same bias, I will be anticipating lower prices. While currency that trade on the opposite direction of the dollar index, I will be anticipating higher prices. So last week we talked about gold. I gave you guys my own personal opinion on where gold should be trading going in this week. I told you guys to focus on the 1 hour time frame and the daily time frame of gold. That I'm not looking at price to expand higher directly to run the overall direction of price trading to a new swing high on the dollar index. Sorry, on gold. There might be a few consolidation before price will be trying to create a new swing high or creating an all-time high on gold. So my bias was that focus on the 1 hour time frame and the 4 hour time frame. Use that to derive an intraday setup, but an overall trend for price to run the buy side liquidity wouldn't be the idea I will be sticking to unless I can see a good support area on the 1 hour time frame or on the daily time frame for price to use as a support for price to run the buy side liquidity. Currently, price traded through this daily fair value gap, so there might be a retracement lower to this inversion fair value gap. The inversion fair value gap might serve as that support area for price to run the buy side liquidity. But for now, I want to see that shift in structure inside the inversion fair value gap. So going in this week, I'm still looking at the idea of a retracement down to the inversion fair value gap. If price were to retrace to the inversion fair value gap and there's a 1 hour shift, that might lead to higher prices. On the 1 hour time frame, last week, you can see the shift in structure from the moment price took out this high, internal shift, traded to the daily fair value gap, traded lower before a complete trade through the daily fair value gap. A retracement. I was looking at this order block for price to use it as a resistance area to trade lower, but I didn't take any trade, which I told you guys I don't personally trade gold unless I'm trying to show you guys an example or trying to prove that I will be taking advantage of the trade because it's a high probability setup. But personally, I don't trade gold, so this wasn't a high probability setup for a retracement to the inversion fair value cap, so I didn't take the trade. But it was still an idea I was looking at. I was looking at this candle for price to use it as a resistance area to trade lower, with the idea of price using the daily fair value gap as an inversion fair value gap to trade lower. But so far, price traded through it. Look at the swing high, created a new high on the 1 hour time frame, but did a shift in structure after forming out this high, and the new week open, price did a retracement. Currently, I'm paying attention to this 1 hour fair value gap, depending on how price will be reacting to the 1 hour fair value gap. If price were to respect the 1 hour fair value gap to trade lower, the next drawn liquidity should be the inversion fair value gap. But to put it all, I don't have a clear bias on gold currently. I need to see more price action to give me more perspective of where price should trade to. But if I were to go into the week with an idea of where price should trade to, I will be anticipating lower prices for price to retrace to the inversion fair value gap. Now, there are moments in price where you don't have a clear bias to where price is trading to. It's normal. I think so far on the dollar index, price haven't given me a clear direction to where it's trading to so far on the dollar index. But there are weeks where I don't clearly have a perspective on where price is trading to. It's mostly when I look at more price data and more developing price, then I look for those intraday setups. And I'll be going with that idea going in on gold that I don't have a clear bias overall. But if price were to trade lower and there's a 1 hour trend trading lower to the inversion daily fair value gap, then I will be looking at it as a trend to the new, sorry, saying new week opening gap, to the daily inversion fair value gap. But I hope you guys understand that you don't you can't have a bias all week that's going in every week. You have a direction on where you are trading to. In some cases, it's mostly during the week that that you can clearly look at price and understand where price is currently trading to, and you take advantage of that idea. Just like last week when I told you guys that there isn't any clear perspective on where price is trading to, you just need to wait for those intraday setup for you to take advantage of. Like a run on this buy side liquidity before a retracement lower. If you can pair it up with time correctly, you can take advantage of those intraday setups, which I've taught you guys how to trade intraday setups on the YouTube channel. At the same time, I taught it on the 2025 mentorship program. You just need to go through those lectures and understand how you can trade intraday on time on times where there isn't a clear bias from the day time frame or from the weekly time frame. Let's look at gold from the weekly time frame and let's see where price is currently trading at. Okay, on the weekly time frame, the bias is still higher prices. After retracement to a weekly fair value gap, you can see the weekly fair value gap. Let me mark it out. Here's the weekly fair value gap. Support from the weekly fair value gap and price have been trading higher to run the buy side liquidity. I told you guys that I'm still anticipating price to form an all-time high, but currently I'm not looking at price to trade higher. Now I'm still looking at where price will be using for a support. It may be the daily inversion fair value gap, just like how I mentioned on the daily time frame. So you can see weekly is still aligned with that idea in price running out the buy side liquidity, forming a new all-time high. So still anticipating higher prices, but currently not this week. I need to see a good retracement and a good retracement to a daily point of interest that might lead to higher prices or price to run the buy side liquidity. Which the current area I'm looking at is the daily inversion fair value gap as a support area for price to trade higher to run the buy side liquidity. So that is it for this week live top down analysis. See you guys in next week top down analysis.